Yo, welcome to the show.
Yo YouTube, what is good? Welcome back to another video, or if you're new, welcome to the channel Zero to Hero Investing. It's Sunday, September 28th. It's 9:06 a.m. It's an early video. It's an early portfolio update. If you're new here, we make videos on a couple different things. My Robinhood, my taxable portfolio inside Robinhood, my Roth IRA inside Robinhood, and I've also been making videos on my budget. I'm trying to do that around the 20th of each month when my budget resets. But in any case, lots of good stuff in store. It's all around personal finance, kind of investing towards a, let's say, a financially independent life. In a sense, we do like dividend updates, a lot of random stuff about money. I want to start tracking my net worth on YouTube, but it's all just rambling at this point. So we're going to quickly talk about my taxable Robinhood portfolio. This one right here, $48,513.54. And this entails everything up to close of market. What would that be? September 26th, Friday, September 26th. I was up about 0.5% in the day, and then just a little bit more after hours. On the week, let's see what that chart looks like. My computer is very slow. We're down 0.71. On the month, we should be up a little bit if and when it loads. Up 1.18% on the month, about $550. 3 months, we're up almost 8%. Year to date, up almost 15%. And for the 1 year chart, we're up about 15.5% 1 year. So that's the portfolio. Those are the timestamps in the portfolio. The buying power is around $80 right now. I've been selling out of a couple positions just to buy into others that I am more convicted on, and really just trying to slim down my portfolio as I see fit. I'll talk about that as I go through the stocks and ETFs here in a minute. For options, we have two ongoing options right now. One's a debit spread on the SPY. I believe at the earlier part of this month, I had the conviction that SPY was gonna tank, or not tank, but like pull back some. It's September. It's a traditional like bloody September, which was not very bloody at all. But I threw 25 or like 22, $23 in there, hoping that I could quote unquote like hedge my portfolio. I mean, with with $25. But there you go. Actually, it was $22. It says it right there. Down 100%. This will expire in like 2 days. No, tomorrow or Tuesday, whenever. I don't know. But yeah, obviously that's a dead trade. And then this is a forward option that I have going. It's just another call that I rolled into. Actually, I did it on Friday yesterday, or on Friday 2 days ago. I had the 1150 expiring on Friday, but forward. Let's actually go into this. Forward just went up like 3-4% on the day of expiration, and that's just crazy. I mean, this call was worth oh, actually, this isn't even a correct call, but the one I rolled out of, I don't really want to explain this, but I just had one expiring yesterday, and I didn't want to lose my shares of Ford, not yet, so I rolled it a month out. Same strike, whatever. But let's get back into the portfolio. As like, give me like 2 minutes for this to load. All right, so we got the stocks and the ETFs over here. I don't know what the best way to show this is. I always struggle with this total return. Let's do that this week. Maybe I should just kind of mix or juggle between all of them. We've got SPY, the head of the portfolio. It's almost at like 19% total holdings, or like portfolio diversity, and I love that. I ideally see it being at around 20%. Now that I'm shuffling things around, I might even bring that up to 25%. I wouldn't mind SPY being a quarter of my portfolio, if I'm being super honest. QQQ we have next. Well, SPY, let's talk a little bit more about that. It's S&P 500 ETF, probably the most common one or most liquid one. Almost 14 shares right now, 13.83 and a bunch more decimals. We buy about $18 a day of SPY. I did cut back my my daily recurring buys, some because of just expenses coming up. If you want to check my budgeting video out, you can, just to see what's going on in my personal life. But we still buy SPY on a recurring basis. It's just a smaller value, a smaller daily amount for this short period of time, hopefully. In either case, we're up 11% on SPY. That's around $900. QQQ's next, almost 10 shares in that, up 17.25%. Another strong ETF from the Invesco 100. It's beautiful. Next, we have SCHD, and we've crossed the 200 share mark on that. I believe the last dividend I received was like 202 shares or something. So if you want to see the dividend video, it should be coming out around Tuesday or Wednesday, whenever the first of the month is. I'll release that. Be sure to subscribe and stay tuned for that. It's definitely my largest SCHD payment, my largest dividend payment ever. Overall, we're up 0.69% on SCHD. Not the greatest year or year-to-date start for SCHD, but the dividends are pretty consistent, and it's just having a slow year. I'm sure things will pick up. Next, we have Rocket Lab, up around 93% on this. I just want to get to 100 shares, but it keeps getting so expensive, and it's such a volatile stock. Frankly, I mean, it definitely puts me on edge sometimes, but that was how Tesla made me feel. I don't think I'm over leveraged in it. I think I'm about 7%. 8% portfolio holdings or portfolio diversity with RKLB, which is a lot. But I just want to get to 100 shares, and then after that, I'm sure I'll cool down on my buying it, and hopefully the portfolio will like grow around it. But I mean, 92%, 93% in the few months I've been invested. I really can't complain, can I? Of course, I could lose all that, but I think my overall sentiments for not only the company but the sector or what it does is it has so much opportunity. So I think for that reason, it's for sure, in my head right now, it's a long-term hold. Next on the list, we have Microsoft, which I skipped. Oh no, yeah, I did skip one. SPYG. SPYG is a special one because it's one of them ETFs that I said I'd hold forever, but I've been slowly selling out of this SPYG because I already have QQQ. And while I think SPYG is the returns have been better in the short-term history. I think SPYG's returns are better, but I think with QQQ's name, I'd prefer to have them as like that growthy type of ETF rather than SPYG. For that reason, I've been selling out of SPYG. You can see, I mean, 18.6% return so far. But also in efforts to kind of downsize the portfolio, it is one of the ETFs I could consolidate with another ETF, and I'm choosing that one. So even sometimes like QQQ, I'm considering replacing that with like SMH, which is way more like focused on just one thing. So maybe not the smartest move, but there you go. SPYG, 28 shares right now. I sell maybe a share or two a day, or whenever I feel like there's another opportunity and I need the buying power to take care of it, I might sell SPYG, but just letting you all know. Next we have Microsoft, which I have rounded off to 4 flat shares. Really nice seeing that. It's been at like 3.95, 97, 98, and it just paid its dividends, and it was like a 98372. So 30% 4 shares, 30.5% 4 shares. Like I'm feeling good. Microsoft, I've looked at taking all my SPYG and throwing it into Microsoft too, but I wouldn't like. That's a lot of money to put into Microsoft, relatively too. So I would give some to Microsoft, but definitely want to spread it across the other holdings. Next we have Ford, 155 shares of Ford, and you saw the option I have selling against 100 of those shares. My aim, I guess, is to get to 200 shares, and then kind of let it ride. Right now we're up 9%. Ford, I'm kind of iffy about in terms of just future growth, well, I know it will always be around as a company. It's just not a steady, consistent grower. It's so like cyclical in a sense. The dividends have been good. They don't raise that. I'm not sure if they're at risk of cutting it, but I have Ford for now, and I'll probably still I'll continue having it. We have real to income next, which is sitting at 26 shares, up 2.37%. Nice to see this one is officially in the green. It's been trading around break even for me recently. So now it's been coming back. I am not sure if that is with the interest rates or it could be. That would make sense. But hey, it's a REIT, monthly dividend payer, consistent. Not the greatest growing dividends, but consistent for sure. Next, we have a Home Depot, 3.54 shares, up 8.2%. Love it. What can I say? Target, which is, we keep buying it every day. I think it's now like $3 a day because I had to downsize some. Down 20%. I see it every day in my portfolio. It's like a sore thumb. But I still am convicted on it. I think Target could be the one stock that I just stay consistent with my dollar cost averaging method, even with it being down tremendously, and I genuinely reap like the returns of not jumping ship. You know what I mean? So I'll keep throwing $3 a day in until I can even increase that again. So yeah, hopefully hopefully it works out, obviously, but that's where I'm at for now. Next, we have AbbVie, 6.5 shares, 22% in the green. Healthcare stock, that kind of pharmaceuticals area. It is like one of the few, if not only, healthcare holding I believe I have. I think it is AbbVie. Oh yeah, I think it is. But SPY has healthcare stuff too. But of course, Costco has been pulling back a lot recently. I think they got downgraded. I'm not sure what other like stimulus is causing them to pull back like 2%, 3%. I think it was down like 4% on one day this week, or at least at one point during a day this week. Absolutely insane. I've definitely went in and bought some Costco during that dip. Let's say it could be going lower. I'm up on the 6% now. I think weeks ago, I was up close to 20%. So Costco has pulled back a bit. But hey, what can you do? Just buy it at the cheaper prices. General Mills is next. GIS down on this position as well, and it's only 12.5%. It's a similar sentiment as with Target, but I'm not as fretful about General Mills because it's more like General Mills is an ETF rather than a company in a sense. I don't know, and I'm only down 12.5%, and this one, just the way it's not as volatile, I think, as Target is. So I could be wrong. It could be the opposite. Both could be going down. Both could be coming up. Also dollar cost averaging in General Mills though, so there you go. I think it's also $3 a day as it is with Target. Amazon is next, 5.4 shares, about 17% in the green. SMH is the one I was talking about earlier. It's an ETF of semiconductor companies, so it's very like tech focused. It's the same way I see QQQ. QQQ is way more diverse than just technology. But I think if I go like heavier in SMH, not as heavy as QQQ, then I kind of like split QQQ's holdings right now into SMH and SPY. That would kind of balance things out. That's what I'm thinking. I might do that, honestly. Who knows? We have Visa next, and this is also a nice round number of shares. I bumped this up to 3 shares. It was sitting just below that recently. I think Visa has been pulling back quite heavily some of these days too. I'm sure the interest rates have something to do with that. I was for sure up in the like 20+% with Visa, but hey, whatever. JP Morgan Chase seems to be doing well, about 28%, 3.1 shares. Main 20%, 20 and a half, let's give it that, 14 and a half shares. I picked up a little bit of Main this week. I think they're way more than their dividends would have paid. I think I got maybe an extra whole share of Main in increments this past week. So Love that. And then next we have O'Reilly, 8.55 shares, up 26.3% with O'Reilly. And I'll always like just be so proud and impressed by the fact that this has been a position built strictly on a recurring buy basis, starting with like $1.50 a day, and then slowly increasing that to, I think now it's at $3 a day. And hey, there's room to go even higher when, well, maybe not now, but just to show that a small but consistent habit can make a dent. It's gonna keep growing. 190 has been the return so far, and we just keep going. So next we have JEPQ, 15.2 shares of that, 4.66%. Nice to see some price appreciation in this ETF, but the main thing with JEPQ is for sure the dividends, which have been good and consistent. Well, not really consistent. They do come every month, but it's very varied. So, but hey, it's a nice yielder, so we're keeping it for now. American Electric Power, strong company, strong stock, 14% return, positive return so far. Almost 8 shares, gotta bump that up. It's a smaller holding in the portfolio. As you can see, it's the third smallest. And I mean, 8 shares looks nicer than 7.9 shares, let's be honest. APD, this is a new one to the portfolio. It's air products and chemicals, and it's one I added to kind of give some exposure to that sector. I don't know who's been watching my videos for so long, but I used to be invested in like ExxonMobil and like Chevron and stuff like that, and I kind of lost the exposure to that, like industrials and cyclicals, whatever they call them, those companies. And this is a new one that I like the fact that they do have a bit of autonomy in their space in terms of what they produce. Chevron and ExxonMobil, they're literally competitors. APD, from my research, it's a better business case for them. It's more like a monopoly. So I like that. I love that it's a strong dividend payer. And the biggest fit for me is it just fits my like dividend mix. If you watch my videos, like when it pays, how much it pays. I did sell out of Verizon, so I wanted something to kind of help support that position. So APD was that pick, and it's one that I think would be a long-term hold. I'm still watching it. I'm already down 5.5%, so I'm more inclined to buy just dollar cost average, or dollar cost average down, let's say. But in any case, I'm happy with the position so far. Let's see the maximum performance with the chart. As soon as it loads, only 1.6% portfolio diversity right now, so not a whole lot. This is not the max chart, guys. It's just taking a minute to load. All right, there you go. So you see it gets choppy. It is somewhat like Chevron and ExxonMobil and those kinds of companies where it is pretty cyclical. But hey, I'm just seeing how I feel about it. But anyways, back to the main portfolio. Oh, I guess I could scroll down here. 2.67 yield. That's the dividend yield right now, and it grows at around a 7-8% per year, like a 5-year CAGR, 7-8%. So I like that in terms of a long-term perspective. Finally, we have McDonald's. We have 1 share of McDonald's. We're selling out to that. Just didn't really feel like holding it anymore. Doesn't really make much of a difference, but up 4.42%. 1 share left. It started at like 4 shares, and I've been selling like 1 every day, every other day, and now we're here. So by the end of next week, this will be gone for sure. Yeah. So the recurring buys we have O'Reilly, QQQ, SCHD, SPY, and the Target. You can see Target and O'Reilly are only $3 a day. SPY is 18, and then QQQ and SCHD are 5 and 6. So a couple changes with my recurring investments. Have to kind of save a little bit more and invest a little bit less, but the like it's still going. It's just going slower. You never want to stop the line. You just maybe slow it down a lot. You know what I mean? So there's the portfolio. Let's hop over to this view just super quick, just to see the pie chart. See how things are split up. Let's sort this by smallest equity. As we know, McDonald's is going to be going soon. Air product and chemicals. $773 in equity right now, and ideally I want to get all these at least $1,000. That's my short-term goal. But things take time. This one doesn't count too much since it's a newer one, and nothing really should be below O'Reilly, since that's the one I can't super duper control. Like, I can buy these whenever I want, but this is strictly on a recurring buy basis. But anyways, SPY is the largest holding for sure. Then QQQ, my bad. But SCHD isn't far behind. And then we have Rocket Lab, then SPYG, which I guess I could throw. I don't know what I'm doing. But these, I like the way it's forming out. SPY, like I said, if that was at 25%, that would be acceptable. I would not mind that. This is going to be going soon. APD is going to take a little bit more. I like the way things are panning out, and there's other opportunities I see that I can like eliminate a position, or let's say consolidate positions too. So hey, there's good things coming. Maybe by the end of the year, starting next year, I'll have a portfolio that I'm like fully convicted on. Or I guess, can you really ever fully be convicted on a portfolio? You're just always rebalancing. Things change, right? So anyways, that's the video, guys. Thank you so much for watching. I appreciate everything. I'll see you guys in the next one, which will more than likely be my dividend update for the month of September. Thanks for watching, and I'll see you then. Peace.